Good morning, everybody, and welcome back to Beat the Bell, presented by Kane Capital. Excited to be back with you guys. Hopefully, you all had a phenomenal weekend. We have an absolutely loaded trading week on deck. The economic calendar is stacked. We'll get more into that in just a second. But before we do that, let's bring on the panel, starting with Money Mander. Money Mander, good morning.
Good morning, guys. Happy Monday. Still patiently awaiting this desk and setup to come in, but we're getting it done.
Oh, you're looking good. You fooled me. Diamond Trades.
Alejandro, what's going on? Like you said, massive week ahead. Excited to dive into it.
Ramsay Rippers.
Let's do it. Let's go.
Let's get it. All right. Fed forecast economic calendar, boys. Take it away.
Yeah, let's start with the economic calendar for the week. This week is going to be pretty massive in terms of news. And so it'll start off today. We really actually don't have much. We do have the monthly budget statement at 2 o'clock, but after that, we will get CPI coming in tomorrow. Do we have the economic calendar, Ryan, by any chance? If not, that's fine.
Technical
difficulties. All right, that's fine. Well, I can read it to you guys. Tomorrow we've got CPI and core CPI for the month of May. Wednesday, obviously the much awaited FOMC interest rate decision. We'll get PPI in the morning as well on Wednesday. Thursday, we will have retail sales, your weekly unemployment claims. Then you've also got the New York and Philly Fed manufacturing indices. There we go. And then on Friday, wrap up the week with UMich consumer sentiment and inflation expectations. So a massive week in terms of high impact economic news. Speaking of the Fed, on Wednesday, we do still have that degenerate bet that I made on Friday that we will get a surprise 25 basis point hike. It's going to pay out 3-1. Hopefully that will hit. I mean, the markets are pricing in right now 75% chance of no hike, 25% chance of a hike. Unlikely, but massively worth the value in my opinion. So had to smack it. Let's go ahead and touch briefly on the Eurozone. So the Eurozone is officially in a recession. Ryan, you could actually save that picture for a little bit later. But the Eurozone is officially in a recession, right? While American markets await really the biggest week of the quarter as far as macro data, the European markets last week were forced to reckon with their own precarious situation. The Eurozone is officially in a technical recession after Germany. That's Europe's largest economy has struggled amid high inflation that remains sticky, right? Both the aftermath of COVID and escalating geopolitical conflicts in the region have had a negative impact on economic growth. And again, Germany is the largest player in Europe. So even as some of the other nations in the Eurozone, France, Italy, Spain, are actually seeing a modest amount of growth, they haven't been able to pick up the slack entirely. The EU said on Thursday that GDP fell at about 0.4% annualized through March. Further contraction of the EU economy could lead to an ECB pause. So that's sort of the only real silver lining there. We'll have to see how that plays out. But while the ECB wasn't able to or had to sort of announce this recessionary environment that they're in, that was not enough to stall the U.S. markets. The S&P officially broke back into a bull market territory towards the end of last week, marked by 20% off of those October lows. But as our good friend Aisha touched on, and that's the picture that Ryan threw up. Ryan, if you want to get that back up for us. There have been several times over the past, particularly in the past, two real market corrections where we had these bounces of 20% or greater off the lows before ultimately breaking down, right, and making new lows. So it's not necessarily every time that we get this 20% bounce off the lows that that marks the start of a new and long-lasting bull market. Mander, what do you think about this one here? Is this going to be the start of a new paradigm, or is this bull market can be short-lived?
I think the best way to look at it is just unbiasedly, because we kind of have historical data here on both sides. You have 90% of the time we creep back into a bull market off of that bear market low. It held, and you took out all-time highs before retesting that low. But as you hit on in 02 and 01 and in 08 and 09, we did creep back into a bull market temporarily before then falling over 35% from that to set new lows a couple months later. But then you also have, looking at the Fed rate cuts, the last time historically, pretty much every time we've had rate cuts like we've seen this year, it takes 6 months after the Fed has begun to cut rates, not even pause. historically it's been a 6-month average before you set that low. So you kind of have, a teeter-totter here between historical data. So I could see both kind of sentiments working out here. And I think it's most important to stay unbiased, especially as, this rally's been so aggressive. You have bears capitulating, you have bulls celebrating the recent rally. So kind of as we creep back, I think it's just important to note that sentiment and price action can flip in literally a singular week. Whether it's this week or not, I don't know. We have a lot of drivers this week. It could be, but I think it's just important before everyone starts hammering down full margin longs as we creep back into this new bull market. There is a precedent here where we have crept into a bull market before reversing and setting new lows. So I'm still riding long and strong. I'm going to be trading long and strong until that price action does dictate reversal. But just know this has happened before. This definitely has happened before where we crept into a new bull market and then went on to set new lows. So before everyone really celebrates and starts screaming 4,800 SPX coming soon, right? Like there is that 6-month average of Fed cuts. And what I wanted to hit on here is how the indices have really outpaced Fed liquidity, which is not typically seen. Typically you see Fed net liquidity and the indices running linearly. So obviously as the Fed does debt purchases and puts money back into the system, you see the stock market typically go up in a linear fashion here. And as they do quantitative tightening and pull liquidity out of the system, obviously you're going to see stocks go down. There's being money pulled out of the system, and that's typically your linear relationship here. You can see the S&P 500 and the NASDAQ have significantly outpaced the Fed net liquidity since that March regional bank run where they had to pump some money back into the system before continuing with their quantitative tightening. So I think, on one side, you have us creeping into a new bull market. Everyone is feeling very long and strong. Everyone's, super excited. We're starting to see some rotation into that Russell 2000 that we talked about to increase breadth of this rally. But at the same time, you have the Fed continue with quantitative tightening that whether we get a pause or that 25 basis point hike on Wednesday, odds are they're going to continue with their 60 billion monthly quantitative tightening. And then you have the Treasury having to replenish their Treasury general account here coming up soon after the debt ceiling got lifted. So I think we have somewhere in the ballpark of like $290 billion of Treasury auctions going on this week. All of that is going to drain liquidity. And so as we've already seen the markets outpace the net liquidity increase, they're kind of already extended already. And then we're going to have a sharp decrease in liquidity from the Fed and from the Treasury. So I think we're getting to that point, right? Everyone was long and strong this whole rally up. But I think with no pullback being seen over the past really month, should we get one, I think it would be warranted.
Right. I think you could also see a situation where we do get that pullback like you're talking about, but it's not necessarily like a world on fire kind of thing, right? Like it may just be almost like a slow motion sort of pullback where you have rotation, like you said, into other names to sort of increase the breadth of the rally. So yeah, I think that this summer can definitely get interesting. And like you said, that you've got to have sort of an unbiased approach to it. And I think taking it one step at a time, especially as the data gets released this week, I'm sure that it'll be pulling in each and every direction. So I think that's very sage advice for this week in particular. But yep, that'll wrap it up for us here at Fed Forecast. We'll pass it back to Alejandro.
Awesome stuff, guys. Very important week that we're headed into. Let's take a look now at the S&P chart. Just give me one moment. All right. So coming into this week, we are trading above the 50th SMA on both the 30-minute and 1-hour SPX charts. Nothing has changed. We've been in a strong uptrend. This has been visualized by the system. Hopefully you guys didn't spend last week fighting the trend. On Friday's show, we talked about the potential breakout in SPX, in ES, and we got it. As you guys can see here, we rallied late in the day, or early in the day rather, but then spent the later half of the day simply chopping around above the moving averages. So looking at this, important to understand the bulls are still very much in control. Now, once we start headed into those data releases earlier in the week and we have CPI and FOMC, we have to be very cautious of the fact that those are market moving events and that we could see SPX swing in 50-point moves in either direction. So very important to respect the volatility and not create a bias. Just because we're trading above the 50 SMA right now does not necessarily mean that it may look like that after one of those data releases. So keeping that in mind. And at the end of the show, I'm going to cover Friday's trade. We had talked about the breakout. We got it. I'm going to talk about how I managed that trade, what I was looking for, why I expected the breakout, and how I was able to manage some runners. But before we do that, we're going to go over to Ramsay Rippers for Bet the Bell. Do it for the system. I'm going to pass it over now to Ramsay Rippers for Bet the Bell. Good morning.
Good morning, guys. Alrighty, stat update. What do we got, Ryan? Let's pull it up for the guys. Practically unchanged. All right. Let's go. Let's do it. What do we got today? Green or red, guys? Looks like the indices are what? Up maybe 1/4 to 0.5%. What do we got today, Diamond?
That's a tough one. I will go green. I'll go green for today.
Mander.
I'm also taking green. I think possible rally today before the economic drivers the rest of the week. So I'm going to stick with green as well.
Hondo.
I'm going green.
I'm going to have to go with green.
Beautiful. All right, second question. Give me a stock, give me a level, and I'll be closing over or under that level by the end of the week. Snipe. Snipe. Diamond.
For me, I will go with Apple. And I want to say that Apple closes below that double bottom support from last week. So that would be 177.5, below 177.5 on Apple.
Perfect. Come to me.
I'm going to take I've been stalking here for a while. I'm going to take Shop over 66. This thing's been in a daily and weekly bull flag here for a while now. Just got a price target upgrade this morning from Jefferies. I think this takes out that recent double top at 65 and closes over 66.
You still in those?
I still am in those.
What are those? This week or next week?
They are now this week. Took them 2 weeks ago.
Gotcha. Hondo.
All right, so I'm going to go with Apple as well. But Diamond must have not been paying attention last Friday when Matt shared, or last Wednesday rather, when Matt shared the monthly map on Rocket Scooter that was screaming bullish. So I'm going to go that Apple closes at an all-time high this week, over 185.
Over 185. I like it. Where are we trading at right now? 181.85, 182. All right, Snipe. All right. Last question. We'll just talk about is the bottom in Apple on Apple, Microsoft, and my bad, guys. Apple, Google, Amazon is the bottom in. We've spoken about it, for a couple other names, NVIDIA and Meta, Tesla. What do we think now? Apple, Google, and Amazon, Hondo?
100%.
On all three?
100%. 100%. I think I was saying yes like 4 months ago. So, now I'm definitely going to be saying yes. Christ, everything keeps going up. Like, it's not even – give me a break.
Diamond, what do you got?
Maybe something like if you would have done like Carvana or something, I would have –
I hear you. I will say Google, Amazon, they're only like 50% up off of those lows. NVIDIA, what is it? NVIDIA, Tesla, and Meta are like 200-300%. What do you got, Diamond?
I keep saying Google is the one that is yet to go that I think is still going to do something special. One of those like short-term moves that we've been seeing in other techniques. I think that still has a lot of work to do.
Yeah.
I think so when I think that you asked this question, Pax, it's like the way that I look at it is the bottom in for these set of like circumstances, right? That pull the stock down in the first place. Like to say like Apple, Google, Amazon, will they ever break the lows that they just set in October? Will October be the lows forever and ever and ever? Like, yeah, I'm sure that they can be broken at some point. But like for this whole round of the world is ending, inflation, X, Y, and Z. For those reasons, we're not going back to those levels for those reasons. If we do, it'll be for something else, right? For something in the future that we don't see coming. But yeah,
Black Swan maybe or something. I don't know.
Yeah, like I agree.
Yeah.
Mander.
My turn. I'll play devil's advocate here. I think if there's any name that could retest this low, it would be Amazon, only because Apple and Google have these AI tailwinds that Amazon really doesn't. And Amazon's really just been getting held up by AWS growth, which is now slowing. So I think if any name would be to crack a bottom that they've recently sent, it would be Amazon. But I got to kind of agree with the guys here. I think it's going to take some black swan event because everything's already priced in. And so if we're rallying 50% plus off of lows, off of the round of Fed cuts and everything, or Fed hikes and everything we just had, it's going to take something completely unexpected to really put them back down that low.
Fair. All right. I like it. Appreciate it, guys. We'll pass it back to Hondo here for, I believe, trade of the week.
Yeah, trade of the week. It's the last thing that we'll cover here before we wrap up.
It's time for America's Trade of the Week.
Now, here's a guy who knows how to trade stocks.
Okay, so coming into last Friday, we were trading within that green bull flag and under the purple breakout point, that trend line that I have drawn out there. And we were live on Beat the Bell, and I was discussing why I was leaning that it would break out. And that was simply because there's a bullish structure. We also talked about the pattern that we've been seeing in the S&P, where we've been getting that chopper pullback Monday through Wednesday, and then Thursday, Friday rally. And that same theme played out this past week. And so I want to talk about how I managed the trade here. So I got long on the Thursday morning, took profits at first resistance, 42.88. And I was out most of the trade at that point. And then it was down to runners. And then I took more at 4300, which was my next level of resistance. But what was important here is that I was able to stay in these runners overnight. And so all you have to do is take a look at where ES or SPX, whatever it is you're trading, puts in a 15-minute swing low. Okay. And that's exactly where I trailed my stop. So if you guys look, we got a double bottom. Ryan, if you don't mind making the chart a little bit bigger again, just so everybody can see. If you guys can see the double bottom that we got within that bull flag, we never broke below that low. You can see how we came back and we tested it once again and formed a triple bottom. And had I been too aggressive with moving, or too conservative rather, with moving my stop up, I would have gotten stopped out of this trade. But instead, I was able to recognize that, hey, we're just trading in a bull flag. We never made a new low. We're still in an uptrend. And so in the morning, we then recognized the bull flag. We recognized the trend line, and we got that nice breakout. And then it was time to trail the stops up. And a couple ways I like to do it. As I just mentioned, the first way is putting it right below the most recent low, the most recent obvious low on the 15-minute chart. But if we get a massive breakout like we did on Friday, I'm not necessarily going to wait for that, because there's a lot of volatility. And in that volatility, you can get these giant flushes. And as you guys can see there, we got a pretty significant pullback after we got that breakout. They trap longs, they bring it back down. And so the way I went about it is I simply trailed it below my most recent level of resistance that had flipped into potential support. So that in this case was 43.15. I put my stop 3 points under that. We eventually come down. No, I didn't catch the top, but it ended up being a really nice 30-point winning trade. And, it's impossible over a large set of trades to catch the top consistently. So I'm okay with just managing the runner, leaving a trailing stop, giving it plenty of room to work. And I find that works much better than trying to be perfect, trying to catch the top and trying to exit where I think that the move will end, because we really never know. And if you go back to 2 weeks ago where we had that 100-point rally, I was able to stay in for the entirety of that move, simply trailing the stop. And had I been trying to pick the top at certain levels of resistance, that obviously would not have worked. Okay, guys, so that is how that trade from Friday turned out. It was definitely a nice winner, looking to continue the momentum this week. Hopefully, you guys are ready to go. Hopefully, you guys did a little bit of work this weekend, and you're prepared for what is going to be a pretty intense trading week. We'll be here all week. doing our thing, sharing our info. We'll be trading live in the Kane Capital Discord. You guys can go to kane-capital.com or scan the QR code to trade with us. Have a great rest of your day, everybody, and we will catch you back here on Wednesday morning at 8:30 a.m. Eastern Time. Have a good one, everybody.